I have over $125,000 in credit limits on just the personal side alone. And I want to share with you one of the unique, super simple, but extremely powerful strategies that I've used with every single one of the financial institutions that I've accumulated those limits with that has worked like a charm. Now, the point of this is to be able to give you some context around unique ways that you can increase your credit limits with financial institutions, even during this down economy, even during this tough lending environment that we're in. Again, as I say in every video, when I talk about this topic, we know that high credit limits give you great financial leverage on the personal side and the business side. I don't need to get into the weeds on that. You can check out other videos. But at the end of the day, having high personal credit limits empowers you in many ways on the financial side. So I want to continue to allow you to or support you in reaching those goals of getting high credit limits on your personal credit cards so it can benefit you in all of the different ways that it does. And I'm going to share with you an extremely simple but powerful tactic that has aided me in getting to that 125 plus mark on just the personal side with my credit limits. So for those of you who don't know, I'm a retail banker by trade. I do consumer and small business banking. And that insight actually has led to what I plan on sharing in this video, because I've learned the insides and outs of how banks think, how their underwriting works, how they market, how they segment and bucket us as customers and clients in their books. And this has led to me learning a lot of intel about, how to navigate the relationships with them, even sometimes when it's difficult, when you're looking to grow those relationships, whether that's going to be on the banking side, the lending side, with credit cards, etc. So the strategy I'm about to share with you in this video is going to be rooted in the fact that banks are extremely competitive in nature. When you set up a banking relationship with a financial institution, they're immediately taking a look at your background. They're looking at your credit report. They're looking at your banking history. And they're also looking at your activity once you establish that relationship to figure out the quality of customer you are. There's two things they're looking to figure out: the level of risk you are and the level of profitability you're going to be able to bring in. This is where they start to segment and bucket you out into, low potential, medium potential, high potential, etc. And I'm going to shoot videos around more of the internal workings of how banks internally score you and how they bucket you. But for the sake of this video, the biggest thing you want to focus on is banks are going to be doing a lot of due diligence to figure out, the risk you're going to pose to them and how profitable you can be. And one of the things that you can do that really teases and tantalizes banks, especially institutions that are larger. This isn't as applicable at your small mom and pop credit union and community bank, but this goes a long way with those mid-size, regional, super regional, mid-size, and large national banks, because they have the technology and the infrastructure to kind of bait you in to demonstrating your banking capacity and your financial capacity. And what I mean by that is they usually have the capacity online to allow you to plug in a bunch of other banking relationships. Some of the more advanced institutions even allow you to pool all of that information into one place and see all of your bank balances and, transfer money almost instantly, etc. Things are getting pretty advanced. So these banks are providing value. They're providing services that create convenience for you, but provides them with information. And a lot of us that are banking from the outside, we don't really know or pay attention to this. We're just thinking banks are provide, it's new technology out. Banks are just constantly up leveling those features, trying to outcompete the next bank and providing us convenient ways to move our money and transact and manage our money, which is true to an extent. But what you don't understand that I've learned as a banker is that they're also using this to study you. The more access to your financial resources and banking relationships they give you, the more you're going to utilize it. And the more you utilize it, the more they learn about you. So something that I've learned that has been extremely, I believe, advantageous in helping me to get better credit limits with the financial institutions, or seamless credit limit increases over time with the financial institutions I've been banking with, again, some of the larger ones, is going to be paying on those credit cards from outside institutions. I want you to think about this for a second. Let's just say your center banking relationship is Navy Federal. You can drop said bank in there. Really, it doesn't matter very much. You have your relationship with them. You might have a checking and savings with them. You have the credit card with them. Whatever relationship you have, but for whatever reasons, you're not primarily banking there. Your primary banking relationship is elsewhere. And this has worked for me with Navy Federal. American Express. I believe it's aiding me with Bank of America. The list goes on. My sensor banking is at a relationship I don't even have personal credit cards at. So where my predominant inflows and income goes into, and revenues really, personal and business, is all coming from an institution that's opposite for where all my credit cards are. So what ends up happening is I have established relationships at these institutions. I have the credit card, I have checking and savings, sometimes maybe even more with them. But I'm not primarily banking there. So whenever I'm making my payments on my credit cards and paying those off on a monthly basis, it's coming from this other institution. And so what ends up happening internally for that bank, and I notice this is a valuable tactic, and I'm going to tell you why, is because the financial institution that I've worked for the bulk of my career, they will code segments and bucket clients based on that transactional activity. We literally will have dedicated call lists to reach out to clients who have external payment activity. Literally, there's entire dedicated call lists for us as business bankers and even consumer bankers to call clients that are showing payments on lending products, especially credit cards or mortgages or business loans from outside institutions, especially when it's frequent. What this does is it demonstrates that you have a sizable banking relationship somewhere else. So whatever you're doing with them banking wise is already going to the good. That's great. But now what they're going to start to do is target you based on your outside activity, especially when you're making significant payments on a debt, because that means that you have significant money elsewhere. Even if you have good money with them, they know and they're segmenting and they're betting that you have significant cash or cash flow somewhere else. They will target offers to you. They will target, and based on what they see, they have so much data that they're able to pull. So they may target more credit card offers. They may target you with balance offers, meaning like you open a savings account and put so much in balances there, or CD, or open a CD with them and move so much money over. They're if they think you have enough, they will offer you their premium banking or their private banking or private client banking and offer you to move over those balances there and offer you a cash reward or bonus. They will do that while simultaneously targeting you on the existing banking relationship that you have. And so how does this all tie back to your credit limits? Well, for one, hopefully the goal, you already have your fundamentals in place. You got good credit, you got great credit profile, you got good existing stable banking relationship with this institution, et cetera, et cetera. All of the things, hopefully you know. And if you don't, comment down below. I don't mind covering another video or at least responding in the comment section with the things that you should have in order if you're looking to grow your credit limits with banks. But this is one of those bonus features that you can provide to tease or tantalize this bank into knowing that there's a much broader banking relationship outside of their books. And they're going to start to do stuff like provide you with new card offers, increase your limits, except you have to be using the card effectively, all of that, right? But when you're doing everything else relatively well, you paying consistently large amounts of money towards your cards, on over time, showing them that there's money somewhere else and there's a healthy banking relationship somewhere else. And for you to make that payment, 9 out of 10 times, that banking relationship is probably hooked up to that bank if you're transferring online. So they even know who it is. So they're going to be targeting you in a positive way. And this is going to contribute to them making you a lot of offers. This is also going to contribute to them continuing to provide value when you're applying for credit limit increases. They're going to be itching to give you that credit limit increase, assuming you're checking the rest of those boxes off, because they want to earn more of your business. So this is a simple but powerful strategy that you should consciously use if you want to continue to expand with the financial institution. Make your payments on your cards from different institutions if you're looking to grow with that bank, and do it for a consistent period of time based on what makes sense for you and your finances, of course. But this is a powerful strategy that I know firsthand, that they will dedicate their talent, their bankers, to target you. They will target marketing and bonus opportunities over to you for doing this one simple thing: having strong, solid cash flow and banking activity at another financial institution that they think that they can earn at theirs. So I want you to comment down below. Let me know what you think of this strategy. Let me know if you've used this strategy and that you can attest to what I'm talking about. Let me know if this is fascinating for you and you want to learn more about other tips, tactics, and strategies to enhance your banking relationships and increase your credit limits with institutions over time, especially in this demanding lending environment that we're in. Comment down below and let me know any additional thoughts that you have on the topic. I want you to like, comment, share, subscribe, support the channel so the channel can continue to support you. Share the content with other like-minded individuals so you can be taking in this knowledge together, bouncing ideas off of each other, and continuing to grow as a unit. I want you to get in the description down below if you want to tie in with me on Instagram. I'm growing out the committee there for all of my pioneers. We're sharing more information there, and we're going to be sharing inspiration there. Again, we're branching out from the financial side all the way over to the fitness aspect of things and looking to overall increase our quality of life and not just our financial quality of life. Get in the description down below if you want to work with me one-to-one. There's an opportunity there. There's a link down in the description to cover the things that I specialize in, that I can assist you with on your personal or business finances, your investing journey, etc. Get in the description down below or comment down below if you just want to learn opportunities to work with me in that capacity. Other than that, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.